While the whole world watches the Middle East burn, one nation is sitting back and cashing in, and it's not the one firing the missiles. Russia has been pulling in roughly $589 million every single day since the Iran war began, a 14% surge over what it was making just weeks prior. Let that sink in. While American taxpayers are watching gas prices spike at the pump, the Kremlin is quietly filling its war chest. Before U.S. and Israeli strikes on Iran, Russia was forced to sell its crude at a steep discount, somewhere between $10 and $13 below market. Now it's selling at a premium. That is a complete reversal of fortune, and it didn't happen by accident. Washington granted India a temporary waiver, allowing it to keep purchasing Russian crude. And with that single policy move, cargoes that were stranded at sea began selling around $90 a barrel, compared to roughly $50 before the conflict erupted. There are approximately 124 million barrels of Russian oil currently being carried on ships around the world, all of it now moving again, all of it now profitable, all of it now funding a war machine in Ukraine that Europe is desperately trying to stop. The European Council president said it plainly. So far, there is only one winner in this war: Russia. It gains new resources to finance its war against Ukraine as energy prices rise. It profits from the diversion of military capabilities. This is not theory. This is what's happening right now in real time. While Washington spins its wheels between two wars it didn't fully think through. Just weeks before the Iran war broke out, Russia's oil and gas revenues for January and February had collapsed nearly 47% compared to the same period a year prior. That is the number you need to hold in your head as we move through this, because it tells you everything about what Moscow was facing and why what happened next matters so much. Russia was bleeding. The Kremlin had a budget deficit already creeping toward its full-year target before spring had even arrived. Oil and gas companies paid roughly $5.5 billion into Russia's federal budget in February alone, down 44% from the same month a year earlier. The screws were tightening. The sanctions, the price caps, the diplomatic pressure. For once, it seemed like the Western financial strategy was actually working. And then the bombs started falling on Iran. Everything changed in a matter of days, not weeks, days. Trading economics data showed Russia's Urals crude trading at $90.97 per barrel on March 6th, more than double its level just 2 weeks prior, and more than 50% above Russia's own budget target, 50% above their own budget target. Think about what that means for a government that was drowning in red ink 2 weeks earlier. It means the pressure evaporated. It means the pain went away. It means every strategic calculation that Washington thought it was forcing on Moscow, every squeeze, every restriction, every negotiating card got washed away by a wave of oil money that neither Ukraine nor Europe nor the American people asked for or wanted. Before the West Asian conflict escalated, Russian oil had been trading at heavy discounts because of sanctions and pressure from the U.S. and its allies. That discount has now narrowed sharply, and Russian crude is trading $20 to $30 per barrel above its average over the previous 3 months. In some Indian port transactions, Russian oil is reportedly selling about $5 a barrel above Brent, reversing the earlier discount entirely. That is a total reversal of the economic war the West has been waging for 4 years. 4 years of sanctions, 4 years of price caps, 4 years of political pressure, and it took one military conflict in the Persian Gulf to undo a significant portion of all of it, not because Russia got smarter, not because Putin found new markets, but because Washington started a war that sent global oil prices through the roof, and Russia, sitting on hundreds of millions of barrels of crude, simply collected the windfall. The Financial Times cited analysts as saying that every $10 rise in the average monthly oil price adds about $2.8 billion to Russian exporters' revenues, of which roughly $1.63 billion flows to the government through taxes. Every $10. Let that formula sit with you for a moment, because it explains why the Kremlin isn't losing sleep over the war in Iran the way Europe is. Every time the price of oil rises, whether because of a blockade, a military strike, a market panic, or a rumor of escalation, Russia's government gets richer automatically, structurally, without doing a single thing differently. The additional fossil fuel earnings of $588 million a day are now enough for Russia to purchase 17,000 Shahed drones every 24 hours at a cost of $35,000 per unit. 17,000 drones a day, every day. with the extra money, while America is fighting a war in the Middle East. And now here comes the part that should make every serious person in this country stop and pay attention. It is not enough that the Iran war accidentally enriched Russia. Washington went a step further. The Trump administration temporarily lifted sanctions on Russian oil shipments in an effort to calm markets and stem the economic fallout from its war on Iran, which had sent crude prices spiraling upward. That is not a secondary effect. That is not an accident of geopolitics. That is a deliberate policy decision made in Washington that directly benefits the Kremlin while Ukrainian soldiers are dying in trenches. And the justification offered that it would calm markets is the exact kind of short-term thinking that has defined American foreign policy failure for decades. Treasury Secretary Scott Bessent called the waiver a stopgap measure to alleviate pressure from the oil shock and argued Russia gets most of its oil revenue by drilling, not selling oil that's been idling in tankers. That argument sounds reasonable until you look at what the data actually shows. According to Kepler data, Russian crude held on tankers fell to 118.3 million barrels this week from 132.9 million barrels at the end of February, suggesting cargoes were moving to buyers fast. The oil is moving. The money is flowing. The argument that this doesn't help Russia is not supported by the numbers on the ground. Sanctions expert Alexander Kirk dismissed the Treasury's argument. Sanctions work by restricting Russia's pool of buyers, which forces it to sell at a discount. India, as one of the few remaining large buyers, has leverage to push that price down further. The waiver removes that pressure and allows Russia to narrow the discount without producing a single additional barrel. Prior to 2022, fossil fuel exports funded nearly 40% of Russia's federal budget. In 2025, this dropped to 25%. That drop was not an accident. It was the result of 4 years of sustained economic warfare. Price caps, sanctions, asset freezes, cutting Russia off from Western financial systems, pressuring India and China to reduce purchases. It was slow and painful and imperfect, but it was working. In the past year, Beijing and New Delhi had both reduced their imports of Russian oil due to concerns over U.S. secondary sanctions exposure, tariffs, and difficult trade negotiations with the United States. The pressure was building. The strategy was producing results. And then in the span of 2 weeks, a military operation in Iran reversed a substantial portion of that effort, and Washington actively assisted in that reversal. Putin and his advisors have likely determined that the war in Iran serves Russia's interests in the short term: higher energy prices, global distraction from a Ukraine war that Putin is not ready to settle, and America at risk of entrapment in a second conflict. This is the strategic picture that Washington's decision makers should be staring at every morning when they walk into their offices. Russia is not a passive observer of what is happening in the Middle East. Russia has interests. Russia has calculations. And right now, those calculations are paying off in ways that would have seemed impossible just a month ago. If the crisis continues to constrain Gulf exports, the upside could be substantial. Analysts estimate Moscow could generate tens of billions of dollars in additional state revenue as elevated oil and gas prices persist. Tens of billions. And that money does not go into schools or hospitals or infrastructure. It goes into the military budget of a country currently waging a land war in Europe. A rollback of sanctions would allow Russia to close the discount and regain access to a wider range of higher-paying markets, as well as substantially boosting export revenues, not by producing more oil, but simply by selling the same oil for a better price. That is the mechanism. That is what is happening right now. And the American public paying more at the pump, watching the news, trying to figure out what is happening and why, deserves to understand the full scope of what is taking place. Putin has meanwhile suggested that energy exports to Europe could resume as EU countries face potential shortages of liquefied natural gas and debate whether to delay a planned embargo on Russian gas. Watch that space carefully, because what you are seeing is a pattern. Every time energy prices spike, Europe blinks. Every time markets panic, sanctions get loosened. Every time Washington is distracted by one conflict, Moscow exploits the opening in another. This is not coincidence. This is a coherent strategy being executed by people who have been playing this game for a very long time and who understand that energy is not just an economic tool, it is a weapon. Russia is currently producing about 300,000 barrels per day below its OPEC plus quota, meaning it could raise output if market conditions remain favorable. That reserve capacity exists precisely for moments like this. Russia has been sitting on that buffer, operating below quota, maintaining credibility within OPEC plus, and waiting. Now the conditions are favorable. Now the prices are high. Now the sanctions are loosening. And Russia has room to increase production at exactly the moment when the world needs more oil and has fewer options for where to get it. That is not luck. That is positioning. Washington is fighting Iran and bankrolling Moscow at the same time. That sentence, written by analysts watching the numbers in real time, should be printed on the wall of every foreign policy office in this country because it captures something essential about the strategic incoherence of fighting multiple wars simultaneously without a clear theory of how they connect to each other. Every barrel of Russian oil that moves through the Indian Ocean because Washington granted a waiver is a barrel that funds the Russian defense budget. Every dollar of extra revenue that flows into the Kremlin because oil prices spiked during the Iran war is a dollar that goes toward artillery shells, drones, and salaries for soldiers fighting in Ukraine. The wars are not separate. They are connected. And right now, the connections are running against American and Western interests. Analysts warn this is a political choice. Governments can hold the line on sanctions, or they can signal that if energy prices rise high enough, the West will always find a reason to blink. That choice will not just prolong Ukrainian suffering, it will undermine the security of Europe as a whole. That is the real stakes here, not the price at the pump, as painful as that is, not the quarterly revenue figures out of Moscow. The real stakes are whether the West has the discipline and the strategic coherence to maintain pressure on Russia across multiple simultaneous crises, or whether every new crisis becomes an excuse to ease up, back down, and let the moment pass. History does not reward the side that blinks more often, and right now the blinking is coming from Washington.